Hey, what if I told you tariffs aren't just shaking things up? They might be handing you just a fantastic trading opportunity, maybe the best one of the year. President Trump has slapped a 25% tariff on steel already, and there's more to come. So, what can we expect? Okay. He's threatening Canada, he's threatening Mexico, and actually has put those tariffs in place. And the market hasn't reacted really well to that. The market is down like $4 trillion in 1 month for the S&P. It's wild out there, guys. Even the hedge fund guys are posting over on X. So they're basically saying on X, I'm not buying no more stocks. I'm going to wait till this thing all settles out. So is that good advice? Yeah, we shall see. But there's one thing that, chaos like this is where smart money, basically smart traders, shine. So let's dive into what's really going on. So do tariffs always rattle the market? You know, it looks like it. It almost seems like clockwork. Back in 1929, we had the Great Depression was already underway. We put some tariffs in place and pow, the Dow fell 39% a year after the tariffs went into place. In 1987, President Reagan hit Japan with tariffs, and pow, the Dow dropped 10% over the next 12 months. And then last but not least, in 2018, when President Trump started steel tariffs, the S&P actually rebounded because of a stronger economy. So the steel tariffs shook the S&P, but it climbed back. So every time chaos hits first, but for traders, that's where opportunity hides. But we have to remember, it's not just us throwing the punches when it comes to these tariffs. Let's see the other side of the coin. Here's a kicker, guys. Tariffs aren't just the U.S., it's not just a United States move. Other countries have been slamming the crap out of the United States for way too long. China, 25% on the cars, U.S. cars being sold there. Canada, do you know those Canucks? They basically charge us 270%. They stick that on our dairy products that we send to them, therefore inflating the value. And guess what? They pocket that. The governments pocket that. The EU is also getting in on the act with a 10% tariff on automobiles. And oh my gosh, this must be in Ireland, a 25% tariff on the whiskey. But the one that takes the cake, I believe, is this one. The daggum French. Basically 200% on French wine. I'm glad I'm not a wine drinker. And don't you know the best wine is actually made in Napa?
There is nothing like a good California wine, though.
So what's going on? How's this hitting us now? And let's check in on this mess. Okay, here's where we're at, guys. The market, is it in meltdown? Here's where we're at. Basically, S&P has dropped 10% since February, or lost about $4 trillion. And that's a biggie. NASDAQ has actually slipped into what's called a correction when the pullback is greater than 10% off its high. And the Dow is also sliding fast. And we won't even talk about the daggum Russell and the small caps. They are taking the blunt of it. So why is this happening? Dow down, NASDAQ down. Well, the big thing is basically the tariffs are starting to hit. The hit in Canada is hitting back. And then also, hedge funds are basically advertising on X. They're basically shouting out loud, hey, we're getting out. We're bailing out of this market. And so the market's reacting down negatively to the downside. I saw one hedge fund guy on a post. He says, dump all auto stocks. The tariff means the R word. Yeah, that's right. The R word is what? Recession. And I don't think so. Basically, who's taking the hit and who's coming out on top? You have to be aware of that. Are there other things you could be trading that will offset the impacts of the tariffs? Let's take a look. First, the winners, the losers. Okay, stocks like Tesla, NVDA, may be hit really hard with the tariffs simply because of materials and all that kind of stuff. Tesla, you have to remember, since the beginning of the year, is down over 50%. If you held on to Tesla from its highs of last year, you got a fool for a client. Let me just tell you that. Yeah, that's one of the dumbest things I've ever seen people do. I mean, I understand playing the long game. However, why lose 50% when even if you would have just had a 25% stop loss, you'd be able to buy it back so much cheaper. And then let's see, NVDA 9% this week. Ford, GM also dropping. Auto costs are up. And the supply chain is an absolute mess and it's getting crushed. But what about the winners? The winners, steel, believe it or not, steel, defensive stocks, Caterpillar, Lockheed Martin, and Nucor. U.S. Steel is in demand. So it's continuing. These are basically like the strong foundation. They're hanging in there while the rest of the market is selling off. So how can we, the big other secondary question is, how can we turn the chaos into cash? How can you turn the chaos into cash? Well, look at this. First, you got to be aware the VIX. The VIX is the volatility index for the S&P, and it's at a 3-month high. And typically, when it gets up around 25% or 25, that means the bottom is close. So it means as the VIX falls back down to normal ranges, the market tends to rally. I'm not putting a lot of credence that the market is going to rally a lot because there's been a lot of damage done to the individual stocks and the indexes since January. It's beaten up pretty good. Next up is look at the individual stocks. Okay, like Tesla has negative 7% to a 5% daily swings. Now, if you're quick on the quick draw, you can basically do some swing trades, some quick swing trades, some intraday swing trades. Of course, I like to use the conditional orders where I buy at an established level of support and sell at maybe 5-10% worth of profit. And NVDA, same type of thing. These stocks are going to continue to be popular. And so, they have a lot of attention to them, but watch the supply as supply of NVDA drops. And then AI is not going away. So NVDA has got an inside track on that. This is not a crisis. It's our playground if we move smart. So how do we play it? I've got 3 options for how to do that. First, ride volatility. Be aware where volatilities go. And I'll be looking at trading both Tesla, NVDA, and guess what? Even crypto. The cryptos that I like right now include XRP, love it, Ethereum, and the old man in the corner is Bitcoin, like Bitcoin, because it's not going away either. The other thing is look to switch sectors. Look for other sectors that are doing well. In other words, you may not want to be in auto right now. You may want to switch to steel. And then lastly, stay quick, man. Stay on your toes. Be ready to tweak your trades daily. Now, I'm not saying jump in, jump out, and all that kind of stuff unless you are a day trader. I am not a day trader. And so what I do is here recently, I have an automated system with a AutoPilot trading system where I enter and exit and then take some profit off the table when I'm up 5% in this kind of a market. And then I reestablish my stop loss at break even so that at least I'm bringing in a little bit. So how are you jumping in? How are you jumping in this market? How are you trading in the market? Let us know down in the comments. So what's your next move? Tariffs are shaking it all out. Tariffs equal chaos plus opportunity for those who are wide awake and aware. What's really sad is when the market starts to basically crumble like it is doing right now, many traders go to sleep. They basically just stop watching. They basically lose interest. Maybe it's because they've lost multiple times in a row, and they will inevitably miss the bottom. And then they will be too late to get in close to the bottom, and the market will have already run up higher than it needs to for them to get in. And they, guess what? Repeat the same dadgum cycle that they always repeat. Out too late, in too early, and we need to make a rhyme about that or something. So where will we be 12 months from now? That's a great question. I'm looking for 12 months from now. We could be anywhere from -8, this is on the S&P, -10 to +8% up. Remember, Last year was a huge year for the S&P, up over 20%, which is um, an outlier. Doesn't happen very often. So we'll keep our eye on it. Guys, if you want to stay ahead, check out my new video. It'll be up there somewhere. No, over there somewhere. Over there. No, over there. And my next video on trading tips you need to know for more consistent trading.